In this video, I'm going to share my simple trading plan, including my full analysis, entries, profit targets, no matter if the market goes up or down, and make sure that you stay and watch until the end because no one is sharing all of this. And throughout this video, I am giving little tips and tricks of things that I look for inside of the live market. I'm LaKiesha, and let's go ahead and get into XAUUSD, also known as gold. So let's just hop right into the charts. I already got a clean chart. We're going to start on the weekly time frame. And let me move this chart over so that way everyone can see it. All right, so if we zoom in a bit on the price the price action for this past week, let me get rid of this. It's a little distracting. Okay, so if we look at the price action for this particular week, the market just closed and we closed this weak bullish candle. Nevertheless, we did close bullish. So that means that possibly if price goes up above this 2339, 2340 area, then price could go up. If we go below here, price can continue to go down. But of course, the way that we trade, there are some moves that are inside of this range, and we want to be able to identify those areas in order to be able to get into the move sometimes before the move, or most times before the move happens, although that's not always possible, but we're going to do our best. So let's go ahead and mark off on the weekly. Right now, what I'm seeing is this resistance level around 2333. So, and I'm drawing these insanely skinny, mainly because when we go down to lower time frames, this zone is going to get bigger and bigger, and we don't want really big blocks of this taking up our screen. That's why I don't trade supply and demand. I do support and resistance, even though they are similar. I don't want really big zones. So the other area I am going to mark off is around 2291, and this is mainly a nice support. And then if we look over to the left, we see that 1, 2, 3 times on the weekly candle, this level was rejected. So this is telling me that this is a really good support level. And then the same with the resistance level that we have up here. We do have rejections 1, 2, 3, 4, 5, and almost, well, 5 because this did close bearish. And then this price action candle closed below here as well. So we're not going to go too far back, but this is basically the levels that I want to draw on the weekly time frame. And we are going to look at this a little bit more later, but I do want to draw, actually, I'm just going to clone one of these, another level. Let's see, let me get rid of that. Another level here on this time frame, and this is going to be a little bit different from what we've seen before, but I do want to draw a level essentially right at this wick. Where this wick is, it's a little it's going to be a little different, like I said, mainly because when we go down, or like I've said in past videos, when we go down to lower time frames, these wicks on these higher time frames are going to be actual candles on lower time frames. And I know it looks a little weird here, but it's going to make sense as we go down. So I'm just putting this here a little prematurely, but when we go down, we'll see exactly what I'm trying to get to. So let's go ahead and go down to the daily. Let's reset our view, and I'm going to scoot over and zoom in so that way it's easier to see. All right, so before we start adjusting these levels on the daily, already you can see by me putting that wick at or on that weekly time frame, then are actually marking off the wick on the weekly time frame. A lot of words there. You can see that price action is somewhat coming together, but it'll probably come more together as we go down on levels. So for right now, I'm going to keep that there and just kind of ignore it. But for this level right here that I drew at 2330-ish level, I am going to adjust it so that way it's sitting. Let me make this bigger. It's sitting pretty much right on top of these two candles right here. And actually, one of my students this past week asked a really good question. They asked, well, why do sometimes you mark off your levels at the bodies versus at the wicks? So, excellent question. So in this situation, I'm marking it off mostly at the body because these two candles do have wicks. And this candle pretty much has no wick. And then this candle has relatively a short wick. So for right now, I'm comfortable with marking it off at the body. So at times I will mark it off at the wick. So just like, you know, this candle right here on this daily time frame, these wicks are actually quite big. So if I wanted to adjust this level, I would probably put it right here at the top of the wick of the shortest candle, because basically what I'm looking for, or the shortest wick, because mainly what I'm looking for is I'm looking for the average price of the candles that I'm drawing these levels around. I'm looking for the average, and sometimes it's a little bit challenging to find that, especially if you have consolidation areas, but other times not. So let's just go ahead and just keep moving forward. But I thought he asked a really good question, and I wanted to share that answer with you all because you are kind of in the same boat. You're trying to find the best way to mark off these levels so that way you can take profitable trades, and this is one of those ways. So I like this level right here, and then if we ignore this right here for a second, I'm going to look at this. So I like to prioritize most recent price action. So I'm going to take this level at 22.97 and put it right at the body of these candles right here. I could, you know, put it right there. That would be totally fine, and that would be 22.95. Actually, I do like that number a lot better, so we're going to keep it right there for now. So this level right here is a little bit tricky, mainly because we have all of this consolidation within here. So let me look to the, so for now, what I'm going to do is I'm actually going to place it right here at 23.17, and you may be asking, well, why are you doing that? And the reason I'm doing that is because there's a lot of candle or price action within this area, and then we also do have a support that formed, and then we have this rejection that formed there. Price broke this support and came all the way down here, which is why I believe that this makes a really good level. So for right now, I'm going to keep it like that. It may get adjusted a little bit as we go down on smaller time frames. And then I do want to squeeze in the chart a little bit, and I do want to draw off another level pretty much right here at 22.85. And mainly because of the same reasons I've been talking about, but basically I'm looking at this area right here, and I do see 1, 2, 3, 4 wicks in this area. And then if I look at more recent price action, which was last week, or actually a couple weeks ago in this situation, then I do see price getting to this zone, but not necessarily touching this zone. So one of the things that you'll find out as you're looking at candles over and over again, that sometimes price will just miss an area. It won't tap into these zones perfectly, and that's totally okay. We do have clues from other candles or previous price action. So like I said right here, we got 4 candles right in the zone, and these are high probability candles because it's on the daily time frame. And if we look left a little bit, at this level, we do have a candle breaking up. We do have 2 wicks there, so we do have more price action to confirm our level placement. So that looks good to me. Still going to leave this alone. Let's go down to the H4 time frame and see how that looks. All right. Once again, reset. All right. So one of the things I'm looking at, I'm actually happy that I drew this before, because it is touching this level at 23.60, let's say 68. So, and then if I look over here, I do see a perfect rejection right here. Price did break up and then break this level and then just took off to the downside. So for right now, I'm actually really happy with this level. I could easily draw it right here and be totally fine. However, I do like the way that the, okay, I can't do that. Okay, I do like the way that it looked when it was sitting right here. So we're going to keep that right now, and then let's go ahead and take a look at our other levels. So these are like perfect rejections. If you look at this level, these candles are sitting perfectly on top of that, and here's a little support, push up, perfect level, love it. Okay, so this right here, I do see some areas in here where it's touching, areas here, we do see a rejection, and I want to see how it looks if I push it up, so that way it touches this most recent support level. And I still do like that, even though it is a little choppy in here. This was, let's see, no, that was like, I was trying to see, that looks like Asian session a little bit, and then some low volume times in a New York session. But generally, I am okay with this. We'll see when we go down to lower time frames. This is sitting on top of that perfectly. Even though it does overhang here, this is older price action. I like to prioritize new price action. And then if we scoot all the way over here, sitting perfectly on top, H4 is looking great. So let's go down to H2. And actually, once again, I like the way all of these levels are looking. I'm just looking for any like overhangs with recent price action, and everything still looks great on H2. We do have some overhang here, but these most recent candles in this zone are actually just touching it with the wicks, so it looks fine. Let's go to H1. This is going to be the lowest time frame that we go down to, mainly because I am starting to trade off of higher time frames, and H1 is one of those time frames. So, okay, so this still looks good. This, I do want to make a slight adjustment and push this up to 23.35, mainly because we have 4 rejections here, and then let me scoot this over. We have 4 rejections here, and then we do have price kind of in the middle of this range, and then we do have a nice support right here. So I do like this level. I like this level as well for the reasons that I said before. I like this level mainly because we have all these candles here that are literally sitting on top of this level, and we have a nice rejection here, and then over here, this is a little messy, but it's kind of in the zone. And then if we scoot all the way over, once again, we do have these wicks kind of rejecting this 22.85, and I do like that number. It's a nice round number, or relatively round number, ends in a 0 or 5, so looks good to me. So, okay, great. So now let's talk about my game plan for the upcoming week. So right now, price is literally in the middle of this range here. And I would want to wait until I get confirmations to take buys above this level. So above this 23.36 level. And one thing I would be looking for in a live market is for price to clear these wicks right here around 23.39, mainly because price made 4 rejection wicks in this area on the H1 time frame. Let me zoom in a little bit. On the H1 time frame, and price failed to go up there and rejected below this support level or this resistance level and continued to sell off. Granted, the last candle before the market closed was this bullish, almost pretty much bullish engulfing candle, but you know, it's still in the zone, so I still don't want to touch it. So for me, this is going to be roughly a no trade zone right in here, because it's kind of stuck in between this resistance and this support. Granted, you can argue that there are some zones within here, but I really don't want to touch that. So the other thing that I'll be looking for this upcoming week, because I'm focused on high probability trades, are pretty much is anything below here. And here is a roughly 23.20 kind of zone. And one of the biggest things for me in this zone is the fact that we have all of this clean price action. All of these candles on the H1 time frame are bullish. So the market likes to balance. So I'm going to be looking for sales in this area to correct this move. And this is going to be a really nice move if it plays out that way. So let's go ahead and measure. This is about, wow, 250 pips roughly. So that would be a really nice move. And then to the upside, going this way, this would be, wow, 286 pips. Obviously, the price action doesn't move in a straight line. It would be amazing if it does, but sometimes we could get lucky like over here. So that is the game plan, at least phase 1 of the game plan, because I'm basically waiting for price to break out of the zone and just seeing what it does. And then, of course, if price comes down here, then comes below here, then I'll be targeting this next level at 22.85. And then on the upside, I haven't really marked off too much because this is a really big zone, but let's just say for whatever reason, price does come up here instead of drawing a box, so I don't have to go all the way over. I'm going to do a horizontal ray. I'm going to be targeting this 23.86 level, so pretty much on the opposite side. And this is 175 pips, so that's a lot of pips. So this is pretty much my game plan for gold. These days, I'm mostly playing it quite safe just because there's low liquidity in the summer months, and I only want to focus on high probability trades. So another thing, if you haven't already, go ahead and follow me on Instagram, where I do share tips and things that I've learned throughout my day. I actually have another video that'll be posting here soon on Instagram. It's going to be an Instagram reel where I talk about briefly how I'm building my edge inside of the market. So go ahead and do that. And if you love this video, give it a thumbs up. Be sure to subscribe and see you next time.